What's the topic today, Brian?
The topic today is how to evaluate the fees of the sponsorship of the sponsor in a real estate syndication.
Yeah, so through the podcast and through our business, we're constantly getting a lot of new investors who are interested in investing. And the first risk that they have to kind of debunk is the bad actor risk. And we have to do that same thing, right? Like that's why we flew out to Vegas to meet Andrew and the team and tour the sites and make sure all of this stuff is real and they're going to be good stewards of your money. And you have to kind of develop these series of questions that you can ask. So we just thought it would be an amazing topic today to kind of go into questions you should be asking a sponsor of a real estate development or us. And they're just good things to understand when you're investing into an LLC like this.
Yeah, we just made a list of the questions that we get, right? And the number one question is, how do we make money? Because our investors want to know that they're not being ripped off, that we're not just doing this to generate fees for ourselves. So they want to know exactly how we're getting paid. So let's start with the Criterion standard fees. Maybe we might talk about maybe some other sponsors have additional fees that we don't charge. But what are typical fees for Criterion?
Yeah, so the easiest one to start out with is an acquisition fee. So an acquisition fee is typically just 1, 2, 3% of the total value of the asset that's taken at closing when you close it.
And so that, by definition, acquisition fee. So those are the costs that we have some soft costs up front. We travel, like we just said, to go see some of these things. Obviously, we have employees and everything else, but so these are costs that we're trying to reimburse ourselves for putting the deal together.
Yeah, so
evaluating all the deals, and
we're billing any costs we actually incur back in addition to the acquisition fee, just because those costs are associated with the deal. It's really about the time and effort putting the deal together for our internal infrastructure. Like you said, we have an office of people, and it takes a team to put all of these packages together. So the acquisition fee is really just time and effort spent on that deal.
And just so I want to clarify. It's 1, 2. I haven't seen 3, but it could be a 3% of the total purchase price. So we just got to make sure we understand that. So if we're going after a $5 million deal, the acquisition fee for us could be $50,000 to $100,000. And so, like Braden said, if we go out there to the site, we have travel costs, we have to stay in a hotel, we meet with the developer, and we end up buying that deal, we will also charge those fees in addition to the acquisition fee. But here's the catch, guys, is that we're lining up deals every single week that we don't buy. And there are deals where we will fly out to a market and we're like, we don't have a great feeling about this. We don't like the area. We're not going to do this deal.
We lost $3,000 or $4,000 last week on a deal we dropped.
Yeah, and so those costs cannot be billed to a specific syndication. Those are costs that we eat as the sponsor.
Yep.
No investor should be obligated for a deal we didn't buy. And so that's why the acquisition fee is important, because it does help cover the time and energy and expertise that we have lining up the deal, but it also helps reimburse us for some of the deals that we didn't buy. And that keeps us motivated to keep looking for deals, because if we couldn't charge an acquisition fee and we weren't getting reimbursed for any of our travel, then we would have to be very, very selective on which deals we even looked at, because we wouldn't have enough money to fund a lot of deals not being able to get reimbursed, knowing that 90% of the deals don't follow through to a closing. So
the next one, you would say, right now we're doing a lot of developments. We're not acquiring properties. What is that fee? Is that the same? And it's not. We just charge a $50,000 fee to the investment company, the company that's raising the money, and that's an equity placement fees is kind of what we call it. The next fee would be a disposition fee, and again, that's typically 1 or 2%. It's typically only taken if we exceed the expected IRR, right? So, like if we're advertising a 22 IRR and we sell and hit a 15, 16, 17, we're not going to hit a massive disposition fee. So, it's kind of at will. We can take that.
It's discretionary, though, and just a little bit more to that point. The closer we are to the deal IRR, the more likely we will take a disposition fee.
Yep.
If let's say we said we think it's going to be a 22% IRR, and we ended up, and we can sell and take a 1% disposition fee and get you to a 21, we're going to do that. Mm-hmm. It's when we underperform as a sponsor, and let's say the IRR is going to be 5%. Or 10% or 0. We're not going to take a disposition fee at that point, because we know we've underperformed and we want to salvage as much of the investor returns as we can. So that's how that's going to go.